Now we'll get to our friend Shah Gilani, Chief Investment Strategist at Money Map Press, joining us to talk about all things about the market. I'll start with the vaccine rollout, which is underway. In fact, started right here in Long Island, in North Shore at Northwell, Long Island Jewish. I mean, I was excited to see that it was right here, somewhere I go. Stimulus sounds like it's right here, like that's going to happen in the next 48 hours. How positive are we, though? Are you feeling very positive or more cautious?
No, I'm very positive, Nicole. First of all, it's nice to be with you. Thanks for having me again. I am very optimistic for those reasons you just put out there. First of all, we've got multiple vaccines now, and I think that those are actually phenomenal technology. The fact that these vaccines are this new mRNA type of vaccine, that technology is incredible, and I don't think people should really hesitate taking it. I've done a lot of research into how this works, how the new mRNA stuff works. It's just fantastic, and I think that's going to go a long way in terms of positive attitude towards what's going to happen in terms of seeing the other side, God willing, of COVID. With that, we have stimulus. We're on the edge of stimulus once again. If it fails once again, I don't think the markets are really going to do anything but shrug, because stimulus, one way or another, is coming. If we get around by the end of this week, possibly by the end of the day, the markets, I think, are going to like that. But the markets know whether that happens, and whether it's, you know, a short-changed type of stimulus, in other words, $758 billion in that vicinity or thereabouts, which is an awful lot of money, there's going to be another package coming, I believe, certainly within the first quarter, and that one may be significantly higher. So the market's looking out towards all of this potential money coming in, and there's nowhere to go for stocks but up.
I like it. I like it. And you make a great point. We didn't really talk about it, but with the CARES Act, we saw multiple rounds of stimulus. It wasn't just one infusion. And we're getting probably another one between now and the end of the year that they seem to be close to. You make a great point. We're probably going to get more in the new year, too, because if the Biden administration comes in, they're going to want to set their own things to brag about in their first 100 days. So I wouldn't be surprised to see it myself. Tell me about Wells Fargo. This is one of the places. Tell me more about, expand your thoughts.
Well, just on the first round of stimulus, a lot of that money went into retail brokerage accounts. And that's really what pushed the market off of the March 23rd lows. So I think if we see more helicopter money, so to speak, that money's going to go into the market. A lot of retail investors got very wise very quickly as to what the possibilities were for making money in the market. A lot of them have done very well, and I think they're going to pour more money in. So we have that behind whatever else the investors are looking at, which there's a lot of positive. We got more retail investors, I think, going to come in, add more money into the market. So that's all good. I like the financials. You brought up Wells Fargo. I bought Wells Fargo when everybody thought it was the wrong stock to buy, but I like the financials. I like the fact I think we're going to see a steepening of the yield curve. That bodes well for the financials. Wells Fargo looked to be the cleanest dirty shirt in the laundry as far as value stocks, and certainly done well with that. It got a little bit ugly as it hit some new lows, but it certainly has bounced considerably since it's gotten off of those lows, and I'm very happy with the position now. So yeah, big deal on Wells Fargo, in a decent position in it, and probably if things continue the way they're going, we'll add to that position, Nicole.
Oh, you will add to it. I mean, it came off the lows of $20 and change. Still not a fantastic performer, but compared to, when I say fantastic, I mean the stock's up almost 20% in 3 months. So that is fantastic. But when we compare it to some of the other high flyers, so this is going to be a slow and steady winner, you're saying. What about Alibaba and also the Russell 2000, which is at an all-time high today? Tell me about some of those opportunities for making money.
We like Alibaba. We bought it on Monday. It had a really nice dip. It's performing well already for us. It's up nicely today, a couple percentage points, but it just looked awfully cheap relative to the metrics. There's a lot of technical stuff going on and a lot of mechanical stuff going on in China between the government and the likes of Alibaba and its Alipay division. So there's some issues there, and I think those are getting cleaned up. That's why we started to buy it, because rumors are that Jack Ma is sort of come to terms with the fact that the government is a lot stronger than Alibaba is ever going to be, that he's ever going to be as rich and as powerful as he may be. He doesn't compare. So I think they're going to play ball together, and that bodes well for Alibaba. We also like the Russell. The Russell, if you look at from the March 23rd lows, to yesterday's close, the Russell is up the most of all the benchmarks. The Dow's up around 64%. The S&P is around a little more than 65. The Russell, the NASDAQ Composite 84 and change. But the Russell, based on the IWM on the iShares Russell 2000 ETF, is up 94% off of the lows. So I think there's more room to go in the Russell than there is on the other benchmarks. So we like IWM here also.
Ah, okay. Well, that's good to know. And you have renewable energy and Rio Tinto also on your list. Quick thoughts on that?
Yeah, like the renewables trade, the biofossil fuel business is, I think, going to expand into the Biden administration. So Renewable Energy Group, symbol REGI, is just, I think, a great stock. It's undervalued. We've owned it a little bit lower. We've already had a nice rise in. I think it's got a lot more to go. As far as the miners, we like Rio Tinto best and by far, and that's already done very well for us. And I think it's going to really continue to go a lot higher. Again, we're looking at industrial metals. We're looking at the metals and the commodities sectors of the economy and globally, and I think those are all going to be strong. I think the best way to play that as far as the miners is Rio.
Shah Gilani, always great to see you. Thank you so very much. I'm glad when you're on the show. Thanks for making time for us today. Shah Gilani, Chief Investment Strategist at Money Map Press. Thanks.